Hey, Mrs. Hood. So now let's talk about some life insurance. So the importance of life insurance. There are some categories that you should think about whether or not you need life insurance or not. So if you're married and you have children, you should definitely need life insurance. But if you're single and you have some savings built up, unless you really want to square away somebody that you really think kindly of, you don't necessarily need life insurance. So you may want to think about foregoing that. But seeing as how you currently are married and you do have children, let's look at some life insurance options. So currently there are two major options of life insurance on the market. One is called whole life insurance or cash value, and the other is term. Now there are some pluses or minuses to each one of those. There's also this thing called needs approach, or whether or not you need it. So the needs-based approach determines the need of a family or death of a primary breadwinner. You're not the primary breadwinner, but you are a breadwinner for your family. So you do want to replace the income that you're providing for your family if you were to pass away. Some immediate needs. So if you were like solely responsible for the automobile payments of your family or the mortgage payment, then you want to recoup those funds as soon as possible. So that's the immediate needs base. Debt elimination, if you procured a certain amount of debt during the marriage and during your life, then you definitely want to leave some money so that they can take care of that debt. Immediate funds to cover bills such as lighting, lights and food and all that, just so that your family doesn't have to worry about it, while they're going through their tough times after you pass away. If your children are in school, that's also a thing to think about, expenses for children and stuff like that. So that's how the needs-based approach works of determining how much life insurance that you need. So now going into the types of life insurance, I have my own opinions about the different types of life insurance. A lot of people want you to buy the whole life insurance. Whole life insurance or cash value insurance does have its advantages. It does provide, you could get it for whatever amount that you want. Usually you want to do like 8 to 10 times your annual income. It's usually right around the average of what you want for your life insurance, so that your family can replace those lost funds for 10 years. But with the whole life insurance or the cash value insurance, it's typically a lot higher than your term life insurance.
How much higher?
Okay, so in your category, the term life insurance that I have calculated for you for a 30-year term life insurance of $500,000. The cheapest is $48.47, and it goes up to right around $50. So let's say on average $50 a month for $500,000 for 30 years. Now, if you take that same calculation for whole life insurance, you're looking at about $350 a month for the same amount of money. Now that pays it up until you're 65. So here's the thing to think about: the difference between term and whole. With the cash value, there are some different things that you could look at that says that when this life insurance policy matures, you are guaranteed a certain dollar amount. Now, if you get to, say, 50 years old and you want to change it, you want to cash it out, they will tell you that your insurance policy is worth X amount of dollars. That's true, but you do not get X amount of dollars. To cancel early, you have to pay a penalty. And also within the first 2 or 3 years of a whole life insurance, those funds are sucked up into administrative fees and all that. So it takes a while to build up your actual money in that fund. Now here's a good thing to look at. So with you having the $500 or $500,000 in 30-year term insurance for $50, you could take that other $300 and put it into a very, very safe 4% interest, whether it be a money market fund, bond fund, whatever, but 4% interest is usually fairly low. So within the same amount of time, in 30 years, do you know how much that $300 would produce?
How much?
$201,909.02, just on 4%. Now, on average, you can get anywhere between 8 to 10%. So you're looking at it anywhere you could possibly, with that $300, make that $500,000 and it be secure. The thing about whole life insurance, the $500,000, if you die, they get that. That's all they get is the $500,000.
Right. So I could actually insure with term life for $500,000 and then have an extra $200,000 if I dropped it at 65.
Or more. So that's the catch with the whole life or cash value option. So, with that, that's my own opinion. I do like term life insurance better, but Will will look at it, and also we will look at it further in depth because, like I said before, I like to try to take it as an approach about a teacher. I'm not going to tell you which one is right for you, but I will say you need to look at stuff like that because there are some differences between the two. One is definitely much more financial, better and sound. But with the whole life insurance, it is a guaranteed thing, but you just have to watch it when you cash it out, and you have to make sure that you let it mature, and plus it is also at a very, very, very low rate of return. Are there any questions about the life insurance?
No, not right now.